I got so much motherfucking design on right now.
Break it down, bring it back, make it clap. I got 3 old thoughts, new guap, where that thing, pictures of a line.
Define of accounting process and book of accounts. First, accounting process. The accounting process is the systematic cycle of recording, classifying, summarizing, and interpreting business transactions over a specific period. It ensures that financial information is accurately captured and reported of decision making. Next is books of accounts. Books of accounts refer to the financial record where a business systematically records its financial transactions. These books help track income, expenses, assets, liability, and equity, ensuring accurate financial reporting and compliance with accounting standards. Next is important accounting process and books of account in business. First is legal and tax compliance. It can ensure business comply with financial regulation and tax law, and it can facilitate the proper filing of tax, avoiding penalties and legal issue. Next is accurate financial record keeping. It can ensure that all financial transactions are systematically recorded. It also can help maintain transparency and accountability in business operation. Next, facilitating financial statement preparations. The books of accounts serve as the source of data for preparing financial statements such as the income statement, balance sheets, and statement of cash flow. Next is assessing financial performance. The accounting process helps businesses evaluate their profitability, efficiency, and overall financial health by analyzing key financial ratios and trends.
I will explain the steps in the accounting process. Firstly, identify transaction. Source documents are the original record that provides evidence of financial transaction. Number 1 is cash sales. Transaction description is sale of goods, account debit, bank, account credit, sale or revenue. Next, check the transaction is cash purchase of asset, cash payment of expenses or owner drawing. Second step is record in journal. After we identify the source of document, we can go through to record in journal. The journal is considered as the book of first entry. It may have general journal and special journal. Special journal such as purchase journal, sales journal, purchase outlook journal, and sales return journal. Number 1, general journal. Source of document is memo. Firstly, put the date 1 April 2011, and the particular is promotion on debit because promotion increase, and on the credit is inventory because the owner took 50 box for promotion purpose, which is the inventory decrease. For special journal, sold goods on credit to just one. This is a sales transaction between business and customer. This is debit because this one purchase this product, so the this one is increased, and account statement is decreased, which is that is credit. Next step is post-through ledgers. It summarizes all transactions related to specific accounts such as asset, revenue, or liability. Journal entries must be posted to the ledgers of related account based on double entry system. Firstly, open the account cash, which is debit. On debit side, because cash increase 10,000. The particular is commission received. Put the date and amount correctly on debit. Ending balance of each account are to be used in the preparation of trial balance. After we post the ledger, we must close the account. Identify which side is higher, and then put the amount on credit and debit, and then balance CD must be on the side that lower. Debit the appropriate account if it increases. Example, asset or expenses. Credit the appropriate account if it reduces. If it decreases. Example, liabilities or revenue. Include details such as date, journal reference, and amount. balanced account. After posting, calculate the balance by adding debit and subtracting credits. Next is preparing a trial balance. After all adjusting entries have been posted and the book is closed, it will be called the post-closing trial balance. It is a reference to a listing of the summary of all the entries of the transactions in the company's books. So there is a format for trial balance. There is a debit and credit, and then on the debit side there is assets and expenses. On the credit side must have liability, revenue, and honest equity. The amount in the trial balance comes from the ending balance of the accounts in the ledger. So the amount of each side must be balanced, adjusting entries. After the trial balance has been drawn up, there are adjustments that must be made to the balance found in the trial balance. The balances of the expenditure and revenue which are shown in the trial balance are those of expenditure that have been paid and revenue where cash has been received. Adjustments must be made for the following. Firstly, accrued expenses. Second, prepaid expenditure. And then accrued revenue. Lastly, unearned revenue. Means 12 months, which is 1 year, per 1 year equals 7,200 ringgit. That is a total salary that should have been paid, but the balance, the trial balance, only 60,000. The conclusion is 7,200 minus 6,000 equals 1,200. So the salary is debit and the accrued salary is credit. So the total amount is the exact amount that must be paid. Next step is preparation of financial statements, which summarize the revenues earned and expense incurred for that period of time. This is the final step in the accounting circle and helps business assess their financial health. Based on revenues, such as sales and service income, and then subtract expenses such as rent, salaries, and utilities. Next, determine the net profit or loss. The balance sheet arrange assets in order of liquidity, cash accounts receivable, such as cash accounts receivable, inventory, and fixed asset. Next are these liabilities, short-term and long-term liability, such as loan and account payables. So the total asset and the total net asset must be balanced. Lastly, closing the books. Expense account. Transfer expense balance to the income summary by debiting the income summary and crediting each expense account. Next, close this income summary. So this is the example of closing entry, expenses account.
So, my name is Natasha Christina Ahmad, matrix 9.0 Today I want to explain type of book accounts. So, type of book account that we have is journal, subsidiary books, or that we call special journal, cash book, and ledgers. Journal that we have is general journal, and subsidiary books or special journal that we have is first page journal, sales journal, page bulletin journal, and sales letter journal. So, I want to explain about journal. So, journal is the first place where all transactions are recorded before being transferred to the ledger. The date and the expenditure, debit and credit amount. For example, during journal situation, the company put 100 ringgit worth of stock for cash. So, the stock we put on debit and cash we put on credit because stock is increased, cash is decreased. So next, subsidiary books or special journal that we have four special journals. This is the journal, sales journal, page journal or return outwards, and last one sales journal or return inwards. Page journal is record of goods on credit, and sales journal record all sales on credit, and page journal record of goods returned to suppliers. That means we buy goods from suppliers, then we return goods to suppliers because the goods be wrong color or wrong part. And last one is sales journal, the record of goods returned by customer. That means customer return to the company. So next, cash book. Cash book records all transactions involving cash and banks. It replaces the need for a cash account in the ledger because cash transactions are recorded validly. Example cash book is this. In left we have debit and right we have credit, which is the book to left and the book to right. So we go to the ledgers. What is ledgers? A ledgers is the main book that organizes all financial transactions by account type. All entries from the journal will be transferred to corresponding account in the ledger. So for situation is on to March 20x2, the government so books to limits were 1,000 ringgit Malaysia on credit. So we have to open the account. The account that we open is this account and account payable notice because it notice we say the books or debit to notice, so notice is account payable. So that we look at slide company service function, so they increase on revenue because they sell goods. So revenue is the credit and account payable is debit. So I will continue to use in the accounting process. Type of accounting process that we have is financial accounting, cost accounting, management accounting, auditing, probation, and policy accounting. So how they help me in organize and summary financial data? First one is financial accounting. Financial accounting responsible for recording and managing the company finance. Second is they prepare financial reports such as income and balance sheet. Third is to ensure that all transactions are recorded accurately and complete preparation spending. So the second is cost accounting. Cost accounting is the type of accounting is to provide information to the management of the company to determine the total cost or cost per unit of the production or service. The objective is to help the management in cost control. Third is management accounting. Accounting is responsible for company financial planning and management. They make decisions related to investment, financing, and expenses. Therefore, they analyze the company financial performance to ensure financial stability. So, four is auditing. Auditing is review and verify the accuracy the company financial record. They ensure that the company complies with financial laws and regulation. They also consist of internal auditors, internal audit, or external auditors, or external audit. So, five is taxation. Taxation is manage the company tax affairs. So, they ensure compliance with tax laws. They also assist in the preparation of tax reports and advise the company on tax strategy. And the last one is forensic accounting. Forensic accounting is to analyze financial data to identify trends and business opportunities. They also assist in the preparation of budget and financial for risk. So, they provide recommendation to manage to increase profit and reduce costs.
In conclusion, the accounting process and book of accounts play a vital role in ensuring accurate and reliable financial reporting. They provide a systematic way to record and manage financial transactions, ensuring transparency, legal compliance, and informed decision making. By preventing error and fraud, facilitating audits, and supporting financial planning, they help businesses maintain stability, credibility, and long-term growth.